looking at that shilling and the fact that we are starting to perhaps trade just below that 81 to the US dollar, does this tell us anything about what the bond market is pricing in on the interest rate front later this week?
And I mean, the market has been pretty quiet most of last week and yesterday and today, mostly because it can be attributed to the primary issue that closed today.
Well, looking at the primary issue that was closed today, what kind of trends are you expecting going forward? It seems that most investors are sitting back and waiting for those monthly primary issues.
I think this is a really a big primary issue because it's the first one of the year. It will determine the signals that central bank will send for the remaining half of the financial year of 2010-2011. So a lot of market players have been sitting back to see what signals CBK will issue to the market.
Well, Kenneth, what kind of signals are you expecting?
Basically, I think we'll continue to see interest rates rising slightly. And we should see, I think there'll be minimum intervention from the central bank. So the central bank governor just made a comment yesterday where he said that where he was asked what his outlook on interest levels, and he said it was up to the banks. I mean, this could show that they're going to keep a hands-off approach for the first quarter, at least.
Well, that's quite interesting development when you look at the bond yield. So we saw them falling from December 2008, and of course we saw the central bank embarking on an expansionary policy, and we saw yields starting to rise in September 2010 after the MPC put brakes on its easing cycle. We're starting to see economic growth recovering quite extensively. We just saw the Nigerian central bank increasing rates by 25 basis points to 6.5%. How do you see this then playing out? I mean, as you alluded to, it seems that it's going to be up to the banks, at least for the first half of the year.
I think, the MPC, the Kenyan MPC meets on Thursday. We're expecting them to hold rates at where they are currently. We don't expect much change. But going forward, the rates will continue to rise. I mean, mostly attributed to the government's need for funds, basically expenditure going up and the drought coming in, higher fuel prices, and rolling out of a new constitution. There's been a lot of upward pressure on rates, mostly that can be attributed to the government treasury.
Kenneth, let's touch on the treasury bills. We saw a massive increase in treasury bills issued to 7 per month from at least 4 previously. How do you think this is going to impact the treasury market in Kenya?
Basically, I think the short-end yields will rise. Be it not that high, but they will continue rising, and this is a clear example of the government's need for funds.
Kenneth, let's touch on the sentiment going forward in Kenya. Some are very cautious as to what we could see on the bond market. Is this your view as well?
Yes, most are cautious until there's some surety of the way what direction central bank is taking. So going forward, yes, most of the market has been cautious from the beginning of the year, and I think we'll continue to see the newer papers being traded, the older papers, most of which are underwater as rates continue to rise.
Let's touch on the secondary market and the impact of the trends, the renewed trends that we've seen there, and what that is going to do to the primary market.
Basically, we're seeing a lot of market players concentrating on the primary markets, and the secondary market is becoming somewhat illiquid. But also, there's been a slight constraint on liquidity in the market from the end of December. We may see the central bank coming in on the value date of this primary issue to ease that. But I think the primary market will be quite active, with most players deciding to sit it out until the next issue, come in and just exit quickly and sit out till the next issue.
Kenneth, I mean, you alluded to the drought a little earlier, and we know how devastating that could be, not only to the people of Kenya, but also the way that it filters through into the bond and equity market as well. Do you think this is going to be one of the key elements that will drive sentiments in Kenya going forward?
Yes, I do. I think in the coming months, I think the drought will place a lot of pressure on the food index with the rising food prices. But as the meteorological department has said, they expect this to maybe for the first half of the year, but from July going forward, it should ease.
Kenneth, just going forward as well, one of the things we have seen in South Africa is that foreigners are pulling out of our bond market as well as our equity market. What kind of trends are you expecting in terms of foreign participation in Kenya?
I think foreigners will look more to the equity market, which has been improving, and pull out of the bond market going forward.